All right, so welcome everyone. My name is Allison Colton and I'm the manager of on-site advisory here at KWB Chartered Professional Accountants. I'm a CPA that's been in public practice for most of my career. We won't talk about how long that has been. It's been a few years. And I have a passion for helping business owners create the lives they dream of. So today we're going to look at how to build a roadmap for your business using budgeting and forecasting in order to help you get to where you want to go while doing all that you can to avoid any detours or potholes along the way. So we all know running a business, you always hit those detours and potholes, but the idea is to plan ahead as well as you can so that you can manage them as efficiently as you can when they happen. It's really important to spend time working on your business in this way, to plan not only where you want to go, but how you want to get there. This will allow you to anticipate those potholes a little bit and get back on the path as quickly and efficiently as possible. So today we'll give you an introduction to KWB for those of you that don't know us, and a refresher for those of you that do. And how on-site advisory fits in with the overall mission at the firm. We'll discuss the differences between working in your business and working on your business. You'll learn about your business roadmap and why it's important to spend time building one. We'll talk about budgeting and forecasting more specifically and how these tools can help you plan for the future profits and cash flows of your business. And at the end, we'll have plenty of time to answer any questions you may have related to this topic or anything else you might be struggling with in your business. If you have anything that pops into your head as I go through the presentation today, make sure you throw it in the chat. Samantha's going to help me monitor that, and we'll circle back at the end and try and answer any questions. So a bit about us at KWB. KWB has been serving small and medium-sized business clients for over 25 years. We work with our clients where they are, embracing things like Zoom to make it possible to work with clients all over Canada. Over the years, we've worked with many different types of business owners, and we've found overwhelmingly that they need support that goes beyond simply helping them prepare their financial statements and tax returns at year end. With these needs in mind, and with the help of cloud-based accounting tools like QuickBooks Online and Dext, we've developed a collection of services that help business owners to utilize their financial information to not only report on the past, but also to help them make better business decisions every day. And that's on-site advisory in a nutshell. Oh, I skipped one. Our mission here at KWB is to provide you with great advice that improves your business, simplifies your accounting experience, and helps you reach your goals. On-site advisory is truly where all the pieces come together, and we can really deliver on helping you build the business and life of your dreams. So talking about that concept of working in your business versus working on your business. Working on your business is an essential part of running your business, and it often falls by the wayside. We see business owners struggle with this a lot, especially in the beginning phases of running their business. When you work in your business, you're working on today's income. So this includes things like making sales calls, managing your current customers, carrying out your services, or building your products. Any of those day-to-day jobs that you need to get done in order to earn the income that you've already brought in the front door. When you work on your business, you're working with tomorrow's income. So this includes things like strategic planning, goal setting, budgeting and forecasting, and the work that's necessary to get you to where you want to be. Both of these types of work are really vital to the success of your business. So don't think about it as good work versus bad work. But those day-to-day tasks of working in your business are much easier to delegate to others than the longer-term planning tasks of working on your business. So working on your business is much more forward focused and strategic, and it's almost impossible to hand off those tasks to anyone that's not immediately involved in the running of your business. So many business owners, like I said, especially in the beginning phases of running their business, they get really stuck in working in their business, and they find it really stressful and hard to carve out that time that's necessary to spend time working on their business. So as a result, those businesses end up growing kind of in a passive and linear way. It's really important to carve out that time to work on your business if you want to achieve your longer term business goals. So luckily, we can help you with that. So we're here today to talk about one of those ways that you can spend time working on your business, which is building your business roadmap. Using budgeting and forecasting, you can build a plan for the future of your business, profits, and cash flows. You'll do this on either the short term or the long term, or maybe both, depending on the unique needs of your business at the time and the decisions that you're trying to make. Building a business roadmap is an important part, like I said, of working on your business. And once you've done the strategic planning to figure out where it is you want to go, you've set your long-term and short-term goals, it's time to sit down and really dig into how you're going to get there. That's what you're doing when you're building your business roadmap. Once you're done, you get to monitor your progress along the way and see how it's going. Check in with yourself every once in a while. So why is it important to spend time building a business roadmap? A business roadmap will help you decide on which is the right path for you and your business. It'll provide you a meaningful way to measure your business progress and growth towards your success goals, and allow you to recognize when you've gone off the path and get back on as quickly and efficiently as possible. It'll help you ensure that your actions are aligned with your priorities and that the priorities that you've set for your business. And it gives your team members a clear understanding of where the business is headed and what path you've laid out to get there. So a budget is a financial picture that typically covers a 12-month period, and that's usually aligned with your fiscal year. It's used to determine what you can expect over the course of the year while factoring in the operational activities that you're anticipating and any new initiatives that you're planning. During the budgeting process, you'll spend time determining your expected revenues for the coming year and then planning your costs accordingly. In the end, you'll have a clear plan in place for the coming year that you can then measure against your actual progress. This will provide many opportunities for learning and growth along the way. Once that budget has been established, like I said, it can then be used as a tool to monitor your progress over the year, comparing what actually happens against what you had planned. They're never going to be the same. In this example, this is the sample company that we're going to look at today, David's Bakery. This is an example of the budget that has been set. It was developed in the fall of 2022 for fiscal 2023. As you can see here, David's planned for just over $1.4 million in revenue for the year, and he's planning for gross profits of almost $609,000. So fast forward to the end of the first quarter of 2023, and it's now really valuable to spend some time looking at the budget versus actual report. I've got a really simple profit and loss statement here, grouping things at a really high level. So of course, in real life, you'd want to spend some time looking at a more detailed profit and loss statement. But here we can see that revenue is down by 7.72% in the first quarter from what the plan was. Cost of sales is actually up 34.53%. So looking at this now, we can start to have some really good conversation with David about what happened. So what is driving the cost of your direct costs up so much as compared to what you had planned only a few months ago? Is there maybe an error in the books that we need to dig into and look at? Is there something that is classified as cost of sales that should be somewhere else? Or is it true that the costs of your inputs have increased that much in that time? So David knows his business best, and he indicates that sadly, yes, there's no error. That's real. The cost of food has gone up significantly since he did his planning in the fall. And he's just dealing with the rising costs of food products in his business. Knowing this now is really valuable to him. He can now make a fully informed decision about how to proceed into Q2 and the rest of the fiscal year, rather than just continuing to blindly operate this way without knowing and changing his course. He can also now have a glimpse into the future based on the actual results of Q1 and using the planning that he's already put in place for the rest of the year. We can see here that he planned, so the light blue line is the budget that he originally set. So he planned to have a gross profit of just over 600,000 in fiscal 2023. Using the actual results of Q1 and adjusting the rest of the year using the plan that he's already got in place, we can see that that has now been adjusted down to about 513,000. So at this point, he can think about a couple of things. Number one is, does he really still think the rest of the year is going to roll out as he originally planned? If the problem truly is a cost increase in his inputs, the answer is probably not, right? So now would be a really good time to rework the budget for the rest of the year, adjust things according to what he now thinks is going to happen for the rest of the year so that he can get a more accurate projection on what he thinks his numbers are going to look like by the end of the year. Number two is, what can he do to try to affect the cost of his inputs? So maybe he can renegotiate some contracts and bring his input costs back down a little bit. Maybe he needs to raise his prices to regain his margins. Better to be thinking about that now at the end of Q1 rather than waiting until the end of Q4 when it's too late to do anything about it. Looking at forecasting is really similar to budgeting. It generally encompasses a longer time frame. So typically 3 years, sometimes up to 5 years, depending on how far forward you really think you can rely on your assumptions and your crystal ball that you're gazing into. Because it allows you to look out further into the future, you then have the opportunity to plan for different scenarios. And you can compare and contrast those different scenarios and think about what the best path forward is for you and your business. It'll help you make those decisions that you're making today that are going to affect your business months and years down the road. It really allows you to be more strategic about those decisions that you're making today. So looking at this forecast report for David's Bakery, we can see that he's planning a couple of initiatives over the next few months. He's going to start an advertising campaign in April, and he's got really lofty dreams that that is going to bring in an additional $8,000 a month in gross margin after tax going forward. He's also considering leasing some new equipment starting in May. This will allow him to produce some of his own raw ingredients and bring that cost of his inputs down a little bit. And he's planning on hiring a delivery driver in the summer, which he thinks will also help to increase sales. We now have the ability within the software that we use to pull these assumptions around the timeline, look at the effect on the gross profit, and of course, many other factors, gross revenues, bottom line, and see what kind of effect these decisions and the timing of the decisions will have. So we can see that under the original plan, the gross profit was projected currently to be just under 600,000. And with these plans in place, it's increasing to 737,000 by the end of the year. We can also build fancy, pretty graphs to show what the profits are going to look like out into the future under each scenario. So the purple line is the business as usual without implementing any of those changes. And the green line is with those changes implemented. So you can see the business is on the same general pattern, but the gross profit will be higher if he implements those changes. Budgeting and forecasting your future revenue and expenses really helps you plan for how profitable you'll be in the future. Once these plans are in place, you can also leverage them to help manage your cash flow more effectively over the same time period. So planning for cash flows can, in some cases, be even more important than planning for profits. A business can absolutely be profitable and still not have enough cash in the bank to meet their obligations on time if they're short on working capital. So thinking about how much of your revenue and expenses are going to run through cash immediately versus running through accounts payable and accounts receivable can be really powerful to extend your planning into cash flow management. This will allow you to spot trends and make the best decisions about where to focus your collections efforts, when the best time to make those big payments are, and have a little bit of a crystal ball to be able to know when you need to start to arrange some financing through the bank to bridge those gaps. Here we can see with the current plans in place for David's Bakery, cash is going to grow over the year, and he's going to have over $400,000 in the bank by the end of the year under the current plan. So knowing that now is really valuable. He can make plans about what he's going to do with that money. Maybe he's going to purchase that equipment outright rather than lease it. Maybe he's going to reinvest those dollars somewhere else in his business, or maybe he's going to draw it out and take a vacation. I don't know, but he has the information to be able to make those decisions now. And if this graph was going the other way and we were seeing, oh, I'm going to dip down in the fall, he can start to talk to the bank now about bridging that gap that he needs to cover. So as you can see, building a business roadmap is definitely not a one-time activity. It's really more of a continuous cycle. And one change decision is going to lead to probably more questions than answers. But thinking and talking about those questions right now, rather than after the fact when it's too late to do anything about them, is a really valuable thing. Once you're finished building your initial plan, it's really important to follow up regularly and assess the results. Repeat the process at least annually, probably more often is even more valuable. And update your roadmap for the changes that happen in your business. Review those budget to actual reports at least quarterly. Definitely recommend even more than that. Monthly is really great. And then again, adjust your plans accordingly. This will ensure that you're staying on that path and you're not deviating too far off. When you do deviate, as you will, you get back on as quickly and efficiently as you can. So at the beginning of my presentation, I promised you that we can help you with all of this. A little bit about how we can do that. On-site advisory can guide you through this whole process of building your roadmap. We can either facilitate the process with you in person or remotely, and we can give you access to some powerful tools that make the process a little less painful. The program that we use that you saw all of those fancy reports come out of today is called Fathom. Or we can simply educate you on the process like we're doing today and help answer any questions that you have and let you take it from there. We can provide you with independent feedback, and using our years of experience throughout the process, we can probably bring up a thing or two that you might not have thought about. We can generally hold you accountable to working towards your business goals and help ensure that you're carving out that time necessary to work on your business. And then once you have that roadmap in place, we can help you take action and measure your progress towards those goals in a meaningful way.